Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial jargon so you don't have to. Today we have a very interesting filing from Archrock Incorporated. They've announced a big debt move, and while it sounds super corporate, we're going to break down what it means for the company and its investors simply and directly. And remember, you can join our Discord community linked in the description below to keep the conversation going after this video. So Archrock Incorporated, a company that provides critical infrastructure services to the natural gas industry, has put out some news. It is not a full financial report like a 10K or a 10Q, which usually gives you a whole picture of their profits, losses, and everything in between. Instead, this is a Form 8K, which is like a special announcement when something significant happens that investors need to know about right away. Think of it as a company shouting an important update from the rooftop. And the big news here is about debt. Archrock's subsidiary Archrock Partners is planning to pay back a huge chunk of debt early. We're talking about $800 million of what they call 6.25% senior notes that were due in 2028. This move is called a redemption. Essentially, they are buying back their own debt before it is officially due. Now, why would a company do this? It usually signals a few things. First, the company likely believes it has enough cash or can easily raise funds to get rid of this debt. Second, they might be doing it because interest rates have changed or they've improved their financial standing so much that they can get better terms elsewhere, or they simply want to reduce their interest payments. Paying off debt early can boost a company's financial health by lowering its obligations and freeing up cash flow. In this case, Archrock is saying they are going to pay back $800 million worth of debt. That is a significant amount. It means they will no longer have to pay the annual interest on those notes, which was costing them a specific rate. This could free up a lot of money that they can then use for other things like investing in new projects, paying dividends to shareholders, or even buying back more stock. It is also worth noting what kind of securities Archrock has out there. Their common stock with a par value of $0.01 per S-share is traded under the ticker symbol ARC on the New York Stock Exchange, and also on what is called NYSE Texas. This tells us they are a publicly traded company and their stock is available for anyone to buy and sell on a major exchange, making these kinds of financial maneuvers very relevant to individual investors. So in this section, item 8.01, which is for other events, Archrock is officially informing the market about this debt redemption. They've announced it, and by filing this 8K, they are making sure everyone, from the biggest investment funds to the smallest individual investor, has access to this crucial piece of information. They also mentioned that a press release detailing this announcement is attached as an exhibit. This press release is essentially the company's official statement to the public about the redemption. Incorporated by reference means that they consider this press release part of their official filing, so we can consider it as part of this report. It is like saying, hey, for all the details on this redemption, go read this attached document. And then we get to the exhibits. In this part, item 9.01, companies list all the supporting documents for their report. Here, they are listing exhibit 99.1, which is that press release we just talked about. They also list exhibit 104, which is an interactive data file, formatted in something called inline XBRL. This is a newer way of filing that makes financial information easier for computers to read and analyze. It is all about making data more accessible and transparent for everyone. Now let's zoom out and think about what this means for Archrock. Companies that can pay off large amounts of debt early are generally in a strong financial position. It suggests they have healthy cash flow, good access to capital markets, and perhaps a positive outlook on their future earnings. Paying off debt reduces financial risk. It means fewer fixed payments hanging over the company's head, which can be especially appealing in uncertain economic times, or if interest rates are expected to rise. For investors, this could be seen as a positive sign. It shows responsible financial management and potentially a commitment to improving the company's balance sheet. However, we don't have the detailed financials here in this specific 8K filing to see the exact cash position or the impact on their earnings per S-share. And 8K is meant for major announcements. Not a full financial deep dive to truly understand the implications. We would need to look at their latest quarterly or annual reports, the 10Q or 10K, which would show their revenues, expenses, assets, and liabilities. But the act of redeeming $800 million in debt is significant enough to warrant attention. It implies management is confident in their ability to generate sufficient cash to cover this repayment and continue operating effectively. It also might suggest they have found cheaper ways to borrow money or believe their future cash flows will be stronger than anticipated, making the current debt unattractive. So, to wrap it up, Archrock Incorporated is making a bold move by paying off a massive $800 million in debt ahead of schedule. This demonstrates financial strength and a likely strategy to reduce costs and financial risk. While this 8K doesn't give us the full financial picture, this action itself is a strong indicator of a company managing its finances proactively. It is like a homeowner paying off their mortgage early to save on interest and have more financial freedom. Now, looking at Archrock more broadly, their business of providing midstream infrastructure for natural gas is crucial for the energy sector, as the world continues to rely on natural gas as a transition fuel. Companies like Archrock play a vital role. Their ability to manage debt effectively, as seen in this redemption, is key to their long-term success and ability to invest in necessary infrastructure upgrades and expansions. The risks for Archrock would likely include fluctuating commodity prices for natural gas, regulatory changes impacting the industry, and demand for natural gas itself. However, their proactive debt management suggests they are well equipped to navigate these challenges. In my opinion, this debt redemption is a positive signal for Archrock. It shows financial discipline and a clear strategy to improve their financial health. It reduces their fixed interest expenses, which should lead to higher profitability and potentially free up capital for growth initiatives or shareholder returns. While we'd always want to see the full financial statements for a complete picture, this announcement alone paints a picture of a company in control of its financial destiny. Alright, that is our breakdown of Archrock's latest significant announcement. What is your take on this debt redemption and what it signals for the company's future? Do you think it is a smart move? Drop your thoughts in the comments below. If this analysis was valuable and helped you understand this corporate move, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community in the description where we discuss these topics further. Thanks for watching and see you next time.